Morning, traders. Morning, YouTube. Hope everyone is doing well here. Happy Friday to everyone. It's the last trading day of the week, and we've had quite the run up overall in equities, and we'll talk about some levels, some directionality, and all that good stuff. But first and foremost, there's still the issue that tech and Silicon Valley has been pretty much being fought over yet again between U.S. and China, right? In one of the most important information and technology battles of the future, I guess. So this past summer, we saw that the passing of the CHIPS Act, which allowed federal governments to pour billions of dollars into semiconductor sector to lead the future industries and protect national security. So the Biden administration also followed up measures with serious export controls to prevent U.S. firms or any global company that uses their tech from selling chip designs, software, and equipment to Beijing. So it's also prohibited American nationals from working with Chinese chip companies to slow their technological advances. So a little backdrop. Chips are used in just about everything realistically, making the modern economy possible. So the big concerns here are that those used in sensitive military technologies, the most advanced integrated circuits lets national and nations stay far ahead of their rivals in terms of weapon systems and intelligence gathering. And more broadly, geopolitical power realistically. So as China grows its influence, the country has been also making strides towards producing its own advanced chips and has even surprised the US with its latest military developments. So until now, realistically, the US has outsourced the manufacturing of most of its advanced chips to Taiwan, and this has been increasingly threatened by its forceful neighbor China. And Taiwan Semiconductor Manufacturing Company (TSM) and other local fab accounts and other local accounts and other local geez, I'm lost it. And other local companies account for about 92% of the world's advanced semiconductor production. So according to Semiconductor Industries Association, the former House Speaker Nancy Pelosi even saw it necessary to meet with TSMC executives directly during tension-filled visits to the island last summer. So that move also highlighted the significance of the company's American security, and its shares went up nearly 10% since the visit. So with that, right, the U.S. is now trying to protect the rest of the advanced chip supply chain by forcing an allegiance that will curtail China's ability to produce its own domestic silicon. So talks are also set to conduct today with Japan, the biggest supplier of chip wafer, metals, and chemicals, as well as the Netherlands, known for its deep ultraviolet lithography machines used to carve advanced chips. So we'll see how kind of that plays out. We've seen a pretty decent rise here in NVIDIA and AMD, those main chips, also SMH, the ETF for chips. NVIDIA yesterday broke through the 196 region, right? We were watching this very, very carefully. NVIDIA broke above 192 very recently, and we propelled some of the upside. Yesterday broke above 196, hitting that 200 mark. And if this rally still continues, I think that chips are still going to get a pretty big boost realistically. NVIDIA is up pretty aggressively from the start of the year, about 140 up to 200. That's a decent pop overall, right? It's rivaling Tesla for its strong start to the year. NVIDIA up about 40% on the year. And realistically, a target still sits around 220 on NVIDIA. There's a decent little distribution block that would be targeted right there if the bulls can really take this over. There's a lot of calls being bought on tech as well as NVIDIA. Yesterday, we saw Intel, INTC, report earnings and dropped pretty aggressively. But names like NVIDIA and AMD still going strong. Yesterday, also, that's the main thing that I want to talk about in terms of news. Yesterday, also, we had a pretty strong rally into the close in the overall market. There's still some potential for the upside. There's a marker at 41.05, which is a distribution block start on the S&P futures. Price can take us there, but right now we're kind of just oscillating at this top. And there could be some kind of pullback for some more buyers to get in. Yesterday, the pullback was pretty fierce right off the open. We dipped pretty aggressively all the way down into that 40-30 region before we saw some kind of upside in the market that really rebounded from 40-30 all the way up to the 75 region, 45-point rally. So today, I'm going to be pretty cautious. It is Friday. They're probably going to try to close this out on a good note to end the week. But dips have to be bought, and realistically, you don't want to see the market dip that aggressively if they're going to be bought. So we have the we have the 40-55 region, which is an area that I think some buyers might be interested. But if we start dipping, realistically, 40-48 and 40-38, also 40-30 are going to be targets for those sellers to see if any buyers can come in. If we manage somehow to close the day under 40-25, which I don't necessarily see super likely, I think there's going to be some kind of sell side that comes in to start the week next week. It's going to be pretty difficult for buyers to really rebound off that level. I think the buyers, they have good momentum right now, and they do have to take this a lot higher. Well, not that much higher, about 40 points higher to really, really prove their point. I think that a lot of people also are looking at this market and thinking, well, okay, we've crossed this massive trend line to the downside. We've crossed the 200-day. We're done with the selling, right? This is a new bull market, which is not necessarily correct because we have to understand what the Fed is going to do. And this is just what I think a strong buy stop run into the Fed, which is next Wednesday. That's going to be a highlighted event that we're going to trade with our room live. But I think this is more of a buy stop run realistically to get a lot of people trapped on the long side before there is movement, even into the end of the month and into the end of the quarter to the downside. I think this is just more of a rally, and you can't call a new bull market until the Fed readjusts its policies, which is not necessarily the case right now. So we're going to see how the Fed reacts next week. Right now, the Fed, we have to look at this, the Fed Watch futures. I believe it's pretty high percent chance that we only hike 25 basis points next week, but it's still a hike nonetheless, right? So it's a 99% chance that we only hike 25 basis points, which is a decent drop because last time we hiked 50, the time before 75. So they're slowly dropping that hike because inflation is getting subdued somewhat. But until they start cutting rates, you can't necessarily think that there's going to be a reversal in this market. So hiking is still strong. We're still looking for subdued inflation naturally, right? We're still trying to meet those Fed targets. Until that happens, it's not going to be the easiest thing to call a new bull market. So with that being said, I hope everyone has a happy Friday, happy weekend, and we'll see you guys on Monday. Remember, check out TradeProAcademy.com. We got a free member side of things that's open up for you guys to check out exactly what we're about. And you can go to community.tradeproacademy.com to get into our Discord. So I hope everyone is ready for the weekend, has a good Friday, doesn't overtrade, has a few trades, just testing the water, see what happens. And today, unlike other days, I'm left fairly unbiased. I don't necessarily know, but the bulls have the momentum. They're going to want to keep that momentum, but don't buy dips until the account's zero. So with that being said, I hope everyone has an amazing Friday and take care. I'll see you guys next time.